little bit earlier, so I might do that now. We are
Yeah,
live.
sure.
Hi,
Yeah.
folks.
Hi. Good to see you
Nick,
guys.
yeah, Nicola here, Conscious Crypto Traders. I'm here with Teresa, and we are going live every day for the next few weeks until we get that big breakout to the upside or the downside. We want to be there for you going through. Oh, we are
Yeah,
live. Do you have
sure.
the video
Hi.
on? Is that me?
Hi. Good to see you guys.
Yeah, Nicola here. Oh, I've got the video on. I'm here with Teresa. Have you got the video on? We are going live every. Oh, sorry about that, guys.
I think it's
So
you. Yeah, sorry. I
it's
was
me.
muted and I'm talking. Sorry about that. So sorry about that.
Yeah, we've hopped on a little earlier because we're just waiting for people to join us. We have some nice. Hey, Scott's kicks. Yes, absolutely. Let's go. Uh, Yep, look, it is exactly 11:30, so we're starting now.
Okay, CME gaps. Let's talk about them.
Yeah, we're looking at the Bitcoin CME futures, and just to let you know, there's a bit of a hissing sound in the background. I apologize for that. My headset's not working, and that's the fan on my computer. But anyway, we have some really good stuff for you today because this is a make or break day in the shorter term time frame, and we'll tell you a little bit about that. So we're looking at the Bitcoin CME futures. Teresa, do you want to explain what that is again for those that have not seen our other videos about CME gaps?
Yeah, so for those of you who are newer to trading, the Chicago Mercantile Exchange is an exchange that most traders pay attention to because most of the big institutions trade there. A lot of big money in the Chicago Mercantile Exchange. It's like 20 times bigger than if you took all the crypto exchanges put together, right? And it doesn't trade over the weekend. So, but whenever we're dealing with currencies, whether it's cryptocurrency or whether it's Forex, those price actions still change over the weekend. So one of the principles that actually came out of the world of foreign exchange trading before we were ever doing crypto trading is that if there's a gap from the price where the CME closes to where it opens again on Sunday, that gap almost always closes. 90, I think it's 95% of the time, I need to double check these numbers, but I think 95% of the time the gap closes by Wednesday. 90% of the time it closes by the next day, like within 24 hours. And something like 70% of the time it closes within 3 to 4 hours of the market's opening. So, and the tighter the gap, the quicker it will close in general, in my experience. Okay, so we've got a gap, right? We know the CME closed at, was it 32,460? Is that the gap marked on your charts?
32,460. Yeah, right
Yeah,
here. That
yeah,
was the price of Bitcoin when it closed on Friday.
yeah. So this is a tight gap, right? And we were talking a lot yesterday about weekend trading in general, right? Weekend trading, the big institutions aren't in the game. The volume's way lower. So a lot of times the price action doesn't meet the targets. A lot of times it turns around halfway. So what we're looking at right now is this upward channel that we're trading in. If it continues upward, we're fine. If it doesn't and it turns around, we might have a head and shoulders forming. And I would then look for the CME gap to fill, in which case, that dictates whether or not you stay in your longs or get out of them this afternoon, right? So
Yeah.
I usually right about this time of day start thinking about, do I want to get out of my long trades or do I want to hold them open? I actually significantly scaled out of my long trade when we hit the top of the channel last night and scaled back in when we hit the bottom of the channel that we're trading in. But now I've got a very small amount of my long trade left. And I think in the next couple hours, I'm probably going to close that because the gap is still below us.
Yeah, and we're going to look at some indicators. So today, guys, we're going to do technical analysis on Bitcoin, look at the CME gap, what the potential of for it going up or down is. Are we going to get a pump or a dump? And we'll look at Ethereum as well. And Teresa, you've got the Ethereum CME gap there, and then XRP. And if there's anything else you want us to do, Adriano, thank you very much for your compliment. If there's anything else you want us to do, like Litecoin or EOS or any of your favorite coins, put them in there. If we get time, we will get to them. And of course, obviously, we would like for you to like our live stream here. This is really, really valuable. Usually, I don't trade. I'll come in on a Sunday just because this is where volume is coming in. And as Teresa said, we closed Bitcoin price at 32,460. Yesterday, when we went live, we said that the current price of Bitcoin was trading at 34,346. As we went live today, we're at 34,336. I think it's actually gone up now. It's 34,423. So we're going up, right? 423, which means the likelihood of when CME opens at 4 o'clock US Mountain Time today, which is 10 o'clock UTC time, you can convert that in your own time, and mark that on your calendar. If the price of Bitcoin keeps going up by somewhere between 2 and 4 o'clock. 4 o'clock it opens, but 2 o'clock volume starts to come in because the APEC markets start opening, traditional markets, Australia, New Zealand, Singapore, retail markets first, and then the stock market and so on. So we start seeing small amounts of volume coming in around that. So that's 8 o'clock UTC time. By 4 o'clock UTC time, the CME is open. To see the order books starting to get a little bit busier with the orders, and the trading starts to pick up volume. By midnight UTC time, which is 6 o'clock for us here, US Mountain Time, then that is when we print the daily candle and the weekly candle. And based on what's going on there, a lot of decisions are being made by the institutions and the more professional traders as to whether or not they think the market is going to go up or down. And often we'll see a flurry one way or the other. So we want to niche down today on all the possible scenarios that could happen, so that you're in the best position to make the best trade and have it not U-turn on you. So the bottom line is, if we keep trading in this price range, and even if we go up a little bit, it's possible when the CME opens that by the time we get, like within a 30 minutes, one time it closed down, we could get a dump back down here. And if we bounce off of there, that's going to be a really good position to put in a long. If we don't bounce and we keep going down to lower prices, let's have a look at what that could be here. Just to let you know that sometimes CME gaps don't close today. They take several days to close, and very few of them close at all. So here are some other gaps that we've got. These two gaps up here, between 57 and 60,000, 48,000, 46,000, they've not closed yet. So obviously when we go up into the next bull run, we're going to have to wait for those to close. Then we've got these two down here. This is why we're talking about lower numbers could be in play. We could go down to 24,940, maybe even 20,000. Highly unlikely we'll go below to close the CME gap for all the reasons we've been talking about in every single one of our live streams. But that's what we want to watch out for. So let's niche down and look at the trades. This time of the day, this time of the week, rather, on Saturday morning, as we're starting to come up into the CME, I like to go to one of my charts. Like, this is the chart I trade on, which is the pickup stick one, right? Then I like to have another chart on a different exchange, and I like to do this. Boom. I like to just start with a clean slate, get rid of all the FUD, the FOMO, and what all the other traders out there and YouTubers out there are saying. And I want to go, Bitcoin, after this week, what have you created? Because that way I'm not getting married to the patterns that everybody is looking at. I'm actually looking at the charts, and I can say, what do I see immediately, right? So then what I like to do is I like to come down into the monthly, and I like to put my Fibonacci in from swing high to swing low for the actual, oopsie, did I get that right? Yeah, for the market. So I'm going to start here at the high, and then I want to go down to the bottom where we started our incline. like that. So now I've got market structure for the support and resistance lines for the entire market, right? You can also do Fibonacci's on the movements and niche down a little bit lower. So when I look at this, the first thing I see is we are trading below the golden Fibonacci, which means we've got a lot of resistance above us, right? And so that's the very first thing I see. Is there anything else you want to add to that, Teresa, before I go into the weekly?
No, that's really good. I love that practice. In fact, it was Nicola that first influenced me to start doing this, of wiping out the lines on your chart and looking at it fresh.
Yeah.
Because trading, successful trading, is all about looking at the possibility of the market with fresh eyes, right? Which is why we talk so much about trading consciously, about clearing away the emotions, the FUD and the FOMO. So yeah, exciting. And like all trading, everything is probabilities, right? So the reason we're focusing on CME gaps today is 5% of CME gaps never fill. In the world of trading, a 95% chance of something happening is one of the best percentages you will ever get.
Yeah.
This is considered one of the most reliable things in the world of probabilities, right? That CME gaps tend to fill. So just be aware of that in terms of your trading strategy.
Yeah. So then what I like to do is I like to come down into the weekly, and specifically for the weekly, we want to bring in the EMA ribbon, because a lot of traders have been saying that during the bull run, we never came back down and touched the EMA ribbon. We traded above it. Then when we came down into that big dump, we still got supported by the EMA ribbon until last week. And then if you see the candle just comes below. So this is when everybody was getting fuddy, going, oh, we're going down to lower prices, we're going down to lower prices. And there was a massive panic. But as we started the week, we immediately started, like we went down, but we immediately came back up in, and we are trading above the bottom of the EMA this week so far. And even if we come down to test the CME gap, it would be right down at the bottom of the ribbon. So we've got support here. So immediately we're looking at a potential turnaround, potentially, right? A medium-term turnaround in the market. We'll have to wait and see, but this green candle is a good sign. Also, the top of the candle is above the highest price we reached last week. So that's a cool sign. That's a really good sign. So then what I'll do is I'll come down into the daily, and I'm zooming out, and then I'm just zooming in and zooming in from that point to have a look at where the trade is for today as volume comes back into the market, and then the CME opens. So now if I come down into the day, we are still trading under the 100-day moving average. We're still under the Fibonacci level. So this is the level of 39,929 is the number to beat. If we come above that, come back down, retest it as support, bounce back up again, and head on up, I think we can then safely say we're taking the lower number dump numbers off the table. Would you agree with that?
Yeah, and I think that's the highest probability, right?
Yeah, it is.
And keep in mind when we talk about, it's probably going to turn around with a CME gap. Like all your trading decisions depend on where was your entry point.
Yeah.
Right. If you're in a multi-day trade that you managed to get in way down at 29,000 or whatever the bottom of this wick was, then that might just be a speed bump in the road to you. Right. Yep. But if you've been scaling in and scaling out and scaling in and scaling out, you definitely want to pay attention to this. So a lot of this depends on what's your overarching trading philosophy, and you don't want to be changing your philosophy with every trade. You can test out new concepts and new ideas, but in general, making money on trading happens with trading the same all the time. So Nicola and I happen to be scale in, scale out traders. So we often do add to positions and scale out of positions. Not everyone trades that way. So just be aware of that when you're making your decisions based on the things that we're talking about here.
Yeah. So I am going to change the lines now. Now I'm putting in my trend lines, right? So even though that we've got a little bit of resistance here, we also have another line here. When you're drawing your trend lines, you want to have as many candles touch as possible, right? So we could have done this, but if we, right, we could have gone there, and then let's just play for a bit, because I this is going to help us figure out what's going on in a way that no other trader is looking at, right? This is a downward wedge. When we trade down into a downward wedge, we break to the upside and we go to the top of the wedge, which is exactly what we did, right? We came down, boom, broke up to the upside, and we touched the same, just a little below this point here, and then came back down. So that's really cool, right? We could say that that is a really cool thing. So then if we draw these lines here, we could say that here is another downward wedge, right? And we almost came to the top of it. We didn't quite get to the top of it at 36,374. We could still get there, but if we look at this on the medium term time frame, we've broken out and we could be going there. Okay. So that those are two things that are showing me that even while everybody has been going on and on and on about how bearish this market is, there are signs Bitcoin wants to turn up. And I don't know, Teresa, do you know anybody that's looked at it that way? Because this is what
that's a beautiful way to look at it.
Yeah.
You know,
yeah, go for it.
That doesn't necessarily invalidate some of the bigger targets that are still in the market, right? Like, I think a very probable scenario for this afternoon is we're going to hit the top of that second wedge, and then turn around and close the CME gap. That doesn't mean when we hit the CME gap or somewhere below it, like, you know, it doesn't always stop at the CME gap. It usually stops at the nearest support lines once the CME gap's filled. We may still turn back around and go up and hit the bigger targets from the triangle pattern that we've broken out of, right? Yeah. So like, don't hear when we're talking about this that we're saying those bigger patterns are invalid. It's just, we might, you know, we've been in a month of busted patterns. Actually, we've been in 3 months of busted patterns, right? Patterns that break out and then U-turn and come back down into the pattern, and then break out the other way and U-turn and come back into the pattern. And this might be what's going on again, right? We've broken out low volume. Weekend breakouts are the most common busted patterns, right? If you read up on them, busted patterns more like breakouts more often U-turn on the weekend than when they've broken out during the week.
Yeah, which is a reason why, you know, Saturday trading can be a bit perilous. So it's better to come in on a Saturday. And as we showed you, we went live yesterday, and the price difference between yesterday and today was $10. So if you're scalping, you know, that's great. But if you're looking for those longer trades and paying fees, you don't want to do that. So here's the pattern that a lot of people are looking at right now, right? This could be a potential descending wedge, which breaks to the downside more often than it breaks to the upside, right? However, we've broken to the upside. And so this is where my pickup sticks come from. I'm looking for patterns within patterns. And now what I'll do is start putting in my lines so that I know that, you know, we have a potential target here of 36,731. And when we bring in the support, we've actually got a resistance line rather at 36,600, I think. So we might not reach that target. Now I'm looking for a trade. I come down into the 4 hourly. Hopefully you're following me with the pickup sticks, right? This is the channel that we've been trading in. And now here we are with the bottom of the market. This, you know, we've got a support at around 29,425. And then we've got the top here. We have broken out. Now, this is what I want to talk about. Teresa, what was the CME gap price again? Can you remember? Was it 32?
I gotta check my charts. Sorry.
Let's put the CME gap in, because this is what we could come back down to. 32. I can't remember offhand. 32,420?
32,460, I think it is.
460. There we go. Okay.
For some
cool.
reason, I can't find it on my charts. Hang
Okay,
on.
let's just call it that. That looks
Yeah,
about right.
okay.
Both Teresa and I are a little dyslexic, so don't ask us to
I'm
remember numbers.
watching your chart. So I'm like, where did it go? Did I delete it by mistake?
Okay, so here is the CME gap, and let's just put a line in there, 32,460.
I'm going to actually check the CME here for you so we get you an accurate number.
Okay.
32,440.
It is 32,440. Okay, cool. Great.
Yeah.
I remembered it this time. Let me just go here. So this makes a difference. 32,440.
Sorry, 32,480. My bad. 32,480 is what it's listing out on the CME.
Okay. Okay, so let's do a range, right? Mm-hmm. So if we go 32,480, it's around about there. It has confluence with this market Fibonacci level, right, of 32,440. So let's write that in. We could come down to 32,440 to there. So if we start dropping, when the volume starts coming in, that right? We'll talk a little bit more about entry points in just a moment. We just want to get
not only does it have confluence with the fib level, if it bounces off the CME level, then we've confirmed the upper resistance line. Then that would be the confirmation of the breakout, right? Yep. So that's what I'm waiting for, which is why sometime in the next few hours, I'm going to likely exit the little bit of long I have left, and I'll enter back in when it comes back down to the CME gap and confirms.
Yeah. And so, you don't want to be holding along in deficit or your profit going down, 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 down and hope that it's going to come back up again. You want to get your profit out of the market. In my opinion, that's what we want to do. Get it out and then just get a better entry point. So when we have a confirmed breakout, it's like we break out above what was previously resistance. We come back down to retest the previous resistance line as support, in which case, depending on where we come back down to, this yellow line descending down here, it could be 32,440. It could be a little bit lower. If we bounce off of that and then come up above 34,908, let's say 34,10, write that down, 34,910, that is classic, good entry point, 34,910, entry point for a long with volume. So if we have down here we have all the green candles coming in, and we have the RSI is either at the towards the 3/4 up all the way down to the bottom, so we know that it's got room to go up and move away from your entry point. That is a possibility for you. So if we were looking at how do I make a decision on what to trade, we want to go down into the 1 hour for a little bit more detail. Now, but at the 4 hourly, this is how my charts get to look like this, guys. On the 4 hourly, we want to bring in the I want to turn the EMA ribbon off now. We want to bring in the 4 EMA ribbon, which is this indicator here, for EMA at Filicone, which is running, and the settings that I've got for that, if you're wanting to follow up on that, is you want to change your inputs. Make sure it's 8, 13, 21, and 55 for the moving averages. When we have blue stacked at the top, then green, then yellow, then red, which happened right here, that's an indication that we're going to have a long that could play out for a long time, as in several days, maybe even weeks, right? And I just got goosebumps on that when I said that. So that's interesting to note. Let me just put that in here, goosebumps. You should never trade on your intuition or trust your gut, as Ivan on tech says. Don't trust your gut. But I just make a note of, can my goosebumps tell me how to trade? So So even if we come back down here, down here a little bit lower and close the CME gap and then bounce off of it, we still looking bullish for a long that could play out for several days, if not several weeks. Now, the danger is that we could fall back into the pattern. And if we do that, we could always come back down to 29,000, 30,000, something like that. Write this down.
I
If
would
we
say
go,
not the danger. I would say the probability. Just given the way this month is going, a lot of the exchanges have been waiting till everybody has their longs in.
yeah,
And then you see a massive wick down in price action,
yeah,
spook everybody, and then it turns around and keeps going up.
yeah.
So we've seen a month of that. Actually, we've seen 3 months of that, right? Where everyone would logically be entering their trades and the market's moving, and then all of a sudden there's a bunch of market dumping. And the market dumping increases the fear, and everybody gets out of perfectly good trades. Smash up the like button and put a comment in the comment field if you know, right? If you've been through this, because I've done it too. I'm like, holy shoot, that should have been a solid trade. All the indicators were good. And I'm like, okay, let me get out while I'm only in $100 loss. And then the trade turns around, right? So be on the watch out for that. Because once the market opens and the big boys are in the playground, the big boys use more sophisticated tactics and they want to take your Bitcoin, right? So it might come below the CME gap. It might come below the top of the support. And that doesn't mean it isn't going to bounce back up and confirm the pattern. It just means, we are in a month of fake outs and busted patterns. We're in a quarter of busted patterns and fake outs. So be on the lookout for that.
And also price manipulation. I mean, the price of Bitcoin has clearly being held down, and you can only hold down Bitcoin for long, for a certain amount of time before it will just balk on you. But right now, what I'm showing you is we have bullish structure, medium term. So even if we get this big dip, we're still in bullish territory. We might come back down into the pattern. We may come all the way back down here. But until we see other signals that are showing us that we're getting a market reversal, what that would be, it would be this red line would start to cross over the yellow line, or the blue line would start to cross down over the green line, right? So let's turn that ribbon off now. This is what I do every week, guys, every Sunday. Actually, I do this several times a week. But hang on a second. Let me just turn some stuff off so you can see. Now I'm bringing in my cracking cryptocurrency Ichimoku, because it's set for the cryptocurrency market instead of the stock market. And what we want when we put in a long is we want to be above the green cloud, ideally. And if we're doing a short, we want to be, we want to be in the red. Now here immediately, look at this. For the first time in a really long time, we've got a green cloud showing up on the 4-hourly. So that means that even if we get lower priceward action, it's more likely we're going to bounce back up and go back up to the upside. So that's cool. So now let's have a look at what is the trade, right? So now, before we do that, I just want to show you this inverse head and shoulders that most traders online missed, except for Carl and MMCrypto. And MMCrypto is going to be speaking at our cryptocurrency conference that we've got up in October. And what Teresa said here, head, the shoulder, the head, the shoulder. The target for that was 35,147, and we just missed it. This is what Teresa's been saying. We're not reaching our targets. We're falling short. So whatever trades you put in, you want to be making sure that you are coming, you see the pattern, here's the target, pull back your take profit by, 150, even $200, 250 to be on the safe side, just depending. So that if you get the U-turn, you don't lose all of that profit that's that's happening there. So that played out, right? And now we're going down. So now what we want to do is we want to go into the 1 hour to go, what is the trade today? And folks, remember, we're not financial advisors. We are this channel is all about giving you tutorials on technical analysis. You can make sound decisions for yourself, right? So you're the one that's got to take responsibility for your decisions. We'll give you as much as we can to make those decisions. So now what I'm doing is I am looking at the 1 hour, and I'm looking, oopsie, I hate it when it does that. I'm looking for some patterns here. And what I'm seeing immediately is a megaphone pattern, which is a volatility pattern of indecision in the market. See, we start here and we're as we go, right? Or if we want to, we could do that, but we're still broadening, and there's a bit of a fake out there. So we've got more candles touching, which is usually the theory around putting your trend lines in. And we've got a broadening pattern. Now, these patterns, these megaphones are slightly bearish, breaking to the downside, which kind of gives us another confirmation that we could be coming back down to that CME gap, or to at least retest this breakout by coming down to the support line. Also, Teresa, I don't know if I've talked to you about this, but whenever you see, even if it's a green cloud, whenever you see these straight lines in a green cloud, on the green Ichimoku cloud, because I watch the Ichimoku cloud like we come up here during the next few hours all the way up to CME opening, often we can see downward price action. So we could see that, right?
Yeah. The other thing that I'm paying attention to is what's happening on the price action in this next round, right? If we don't create a higher high than the last high, then we've got a little mini head and shoulders. And I think the odds of us going back down to the CME gap are a lot greater. In fact, the target of that head and shoulders would be just above, more or less, where the CME gap is, right? So I'm just really paying attention to what's playing out in the next 2 or 3 hours here. Because if we go up all the way up to the pattern, I do have a feeling that we're going to correct and bounce off the top of the pattern, or off the top of the megaphone. But if that's a head and shoulders, it's sort of a fourth confirmation that we're probably heading down to the CME gap.
Yeah, and depending on where we break out, so obviously if we break out here, if we break out there, or if we break out or break down there, this price is going to change, but that's just lower than the CME gap, right? But remember, we've not been reaching our targets, so we could fall short of it. So to me, this is, even though everything is looking bullish on the medium term, I'm thinking we're getting ready to confirm this as a breakout or a fake out, right? So the chances of us going lower is looking more and more likely. So here it is here, look, bullish divergence. Would we call that a bullish divergence?
Yeah, it's a small one.
So we have got short-term movement upwards, right? But because this could be a head and shoulders, I wouldn't long in the middle of a pattern. You want to long at the bottom of it when it's confirmed that it's going back up, and you short at the top under resistance, right? You long at above support, you short under resistance. So, and I also don't like to start putting in a trade until 2, 4 o'clock Mountain Time, so that I've got volume and I'm not just sitting around not knowing what direction we're going in. I want to see conclusive directions. So here are some potential trade setups for you. Right.
I want to add, one of my trading rules is I do not enter a long afternoon on a Sunday if there's a CME gap below me.
Correct.
So if you're thinking of entering right now, I wouldn't advise it. That said, there's no clear direction in the market right now. This isn't a good entry point for anything in this moment.
No, it's not.
Right?
We're waiting. We want to see volume. And as soon as we start seeing that book order start going flutter, 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 we're going to get a boxing match probably is my feeling, because we're in a volatility pattern, which is a boxing match pattern. We're going up. No, we're going down. We're going up. No, we're going down. We're going up. No, we're going down. Right. So, and then, yeah. So if you're going to short this, you would be looking at entering on the breakout candle. If we've got an indication that we're going down, which means your RSI is overbought, and we've got room to go down, and you've got the Ichimoku cloud showing a short-term dump, which means you need to go into the 15-minute. And at the moment, we're not seeing that. We're seeing a bit of sideways action here, which means this could be a head and shoulders forming. Then I go into the 5-minute, again, sideways action, potentially a little bit of doubt to the downside, again, confirming another indication this could be head and shoulders. And then I go to the 1 minute, because I don't want to enter a trade and then get surprised on about a U-turn. So using this Ichimoku cloud, which is a combination of a whole lot of different indicators, to throw out in front of us a prediction of where the price action might be going is invaluable. You guys need to have this on your Trading View charts. And if you're not on Trading View, you want to go down to the bottom in our description, and you want to get the link there to join. So that's what I do to look at a really good entry point, right? But right now, let's get some setups going on. Right now, I don't like to short on a Sunday unless I see a free for all. But if your game, the idea is that you trade the breakout wherever we break out. Now, a breakout is a clear red candle down here, where the top of the candle clears the line. It's not like one of these candles like this one here, where it goes across the line. It's a clear candle under it, right? So you might need to wait for a couple of hours to see if we've got a clear breakout. That's normally a riskier short entry point, but if you've got indicators showing you we're going down, that's a good entry point. The more conservative and the less risky is to do the classic TA, which is confirm the breakdown. We come down, clear candle, we come back up, we test this previous support line as resistance, we come back down, and just as we clear the previous breakdown price, that is the entry point for the short, and the take profit would be, I would do at least the CME gap of 33,340, something like that. Or what you could do is do 75% take profit at the CME gap at 34,340, and then leave 25% in just in case we go a bit lower. And if we don't, then you can just jump out of the trade, right? That's trade number one. Trade number two is wait for confirmation of the bounce at the CME gap. So if we come down, we break down here and we bounce back up. If everything's looking bullish on the Ichimoku cloud, we've got green in front of us on the 1 minute, 5 minute, and 15 minute, and the hourly. We're good for a. Remember, the structure is bullish because we've got the 4 EMA is not crossing, and it's nowhere near crossing. These lines are nowhere near crossing. So double check that before you go into the trade. But usually the Ichimoku is pretty cool. So then you would enter a long, because remember, the bigger pattern that this is breaking out of has a target of let me go to the daily. First stop off would be, well, you could argue that the target's 42,500, but we're going to have many resistances along the way where we could do U-turns, and 36 36,600 is one of them. 35,500 is one of them because we just got rejected off of it. And then, so you have to watch that. And then the next one is 36,600. And then there's the golden ratio at 40,000. And then there's the ultimate target of 42,500, say. Remember, if you're longing this, you want to come down under. So how would you trade this, Teresa? Because this is a huge trade. Would you leave it open or scale in and out?
Personally, I would do some scaling in and out.
Yeah, me too.
And in general, because of this market, like I'm not going to be holding long multi-trade day trades open until I see the miners hash rate recapitulation signal, right? Because that's usually the signal, or it's one of the most reliable signals that it's game on and we're in serious bull run, right?
Yeah.
And so for me, I'm really trading this market like it is a sideways market, which is what it is, right?
Yeah.
We've been going sideways for almost 2-3 months here. So personally, in a sideways market, it makes more sense to scale in and scale out.
Yeah.
In fact, even when I do a multi-day trade in a significant bull run, when I hit significant targets, I take 30% of my trade out. And when we retrace, I add 70% or more back in, right? So that I'm constantly scaling up my trade as I'm more confident in where the trade's going, right? But in a market like this, I would be more conservative in how I trade because I want to keep my Bitcoin, right?
Yeah.
That's just my personal risk management strategy, right?
Yeah. Yeah. And you've got to be thinking about that as well too. But here's the deal. It's like we've had so many U-turns in between this 40,000 mark and the 28,800 mark, right? There's been so much volatility and so many U-turns. How we were trading when we had the bull run and we were just going up and up and up and up. You could leave those trades open for days and it might recapitulate a little bit, but you'd still be in profit. Here, when you're recapitulating, you go into the red really quickly, right? And that makes no sense because when you're in the red, you're paying fees for your leverage, so you're losing profit. You're better off taking the profit, in my opinion, when it's there and coming back in stronger points. So, like this is how we've been trading this volatility. It goes up. It looks like we're hitting resistance. It looks like it's going to turn around. Get out of the trade or take 75% off. When it comes back down, get back in and top up, right? And then when it bounces back up, which is about to do today, possibly, keep going. And then when it hits resistance, you go, oh my God, it looks like it's tipping. Everything's going, ooh, it might tip, it might tip, it might tip. Then take some profit out, comes down, get back into it. So instead of holding open all the way up here, paying fees every 8 hours, each time you lose profit that you've gained in the trade, you're taking the profit at the peaks all the way up here. Normally in a bull run, you might not do that, right? Like if you look at Carl from the Moon or MMCrypto, they hold their trades open for days, weeks, months even. That was in the bull run. And you notice with Carl, he's getting in and out of trades now. He's not holding them open for long because of that volatility. So that's one strategy. And that's
if you watch MMCrypto, Chris is waiting right now. Chris isn't doing a lot of trading in the recent days, right?
Yeah.
So if
oh no, this morning he said he put in a long.
Oh, did he? Okay, I didn't watch him this morning. Whoops. The other thing I'm seeing on this charts though, or a possibility, again, I wouldn't trade this, but a possibility that we've been seeing over the last 3 months is we're just creating bigger triangles, right? Yeah. So if the market turns around roughly where it is right now, we could make an argument for simply redrawing that downward facing line, that we're in a bigger triangle. And if we close more than a couple of candles back inside the pattern, I think the likelihood is we're going back down into the pattern before we break to the upside, and we'll probably hit the bottom of the pattern and bounce. I think that's the most likely scenario. But it's a possibility I'm watching for, because we've had a lot of that happening in the last 3 months, where all of a sudden what we thought was a failed breakout or a busted pattern is now forming a new bigger pattern in the market.
Yeah. So before we get on to Ethereum and XRP and any other coins you want to put in the comments that you want us to look at, we want to look at this fractal that we are watching, that some of you might not be aware of. But right now we're watching this head and shoulders. We're looking to see, is there a short coming up, or are we going to continue back up here? But normally, like if we continue back up here, we're going to drop back down anyway. So I would say that that would be a short incoming. If we touch here, it's looking more and more likely that we could go down. Here's the deal though, whenever something's looking more and more likely, everybody's looking at those patterns, although I don't know if anybody's talking about this head and shoulders right now. And then traders are looking at that, and it just could do a U-turn, especially when the Chinese come on. Sunday night is notorious for price manipulation going in the opposite direction of where all of the indicators are showing price action is going for that first hour when the Chinese market, Hong Kong comes on first, Tokyo, then Hong Kong, and then Shanghai. But it's usually Hong Kong and Shanghai markets where we can have those big dumps. Although after the Chinese government has cleaned up a lot of the miners, we haven't had those really big dumps like we had on bloody Sunday.
Mm-hmm.
Yeah. So anyway, so we're looking up for a setup. So we've talked about that. One last thing on Bitcoin before we move to Ethereum is this Saturn retrograde. I'm not going to go into it because we speak a lot about Saturn retrograde. It's using astrology, like W.D. Gans, who was one of the most successful traders of all time in the early days, said successful traders, can ignore astrology, but highly successful traders observe it. Saturn retrograde. Saturn's a planet of finance, career, and limitation. And so during a retrograde period, when Saturn tips its axis, what happens is that things start to slow down because the magnetics of the Saturn throws out a different magnetic, relationship out into the universe. And we all know that we do get affected by the moon, as Teresa was talking about yesterday, and that's because that's the magnetic relationship that's happening there, and it can affect your psychology as well. The theme of a Saturn retrograde is retarded speed. And have we not seen retarded speed? We have not seen a pump, right? It goes up and it's a climb up, and then it can go down and fall down a little bit, but not those really big down since we had the first dip. Now look at this. In this purple down the bottom, and this isn't perfect, I do apologize. I haven't figured out how to do this fractal. 2020 Saturn retrograde started 10th of May, and then it came out on the 28th of September. During the 10th of May, just as we go into retrograde, we had a big dump, right? Up here, 23rd of May, Saturn went retrograde 2021, that's this year, and we have a big dump. Then down the bottom here, we came sideways, trading within a bigger range, which is exactly what we had here. We were trading within a bigger range. We hit June, July. We start tightening range. We're not going as high. We're not going as low. And we got tighter and tighter and tighter until we get to the point where we go down just a little bit more, swing up. These are daily candles, right? We have a bit of upward action and then shoot up, go across, come back down higher than when we started. And then once we come through some more volatility out the other side of Saturn retrograde, we start to trade sideways for a week, and then we entered into the bull run for sure. If we're going to follow that same fractal, and so far up to this point here, these two candles here, we've pretty much been following it exactly. It puts this rise of the uprising of the price action around about somewhere between the 2nd and the 8th of August. And then that spike can start to come up. So if we're looking at that as a time frame, and then 10th of October is Saturn progressive, which is when we could come out and then start heading back up into a potential super cycle. So going back to Bitcoin, if we are following that fractal, we could still see downward price action and upward price action within this range and not break out of this range. So even though we're going to get a breakout right now, confirmed potentially today or tomorrow, the next few days, and those targets of 42,000 come into play, it may take a week to get there, right? So that's why we're talking about scaling in and scaling out. Anything else you want to say on Saturn retrograde?
Pay attention.
Pay attention. Yeah.
You know, pay attention. Like that's why we say like this is still not the period for holding multi-day trades open, thinking that this is going to be the dominant bull run, in my opinion. But certainly that's not the way I'm trading, right?
Yeah. One last thing I want you to see is that when we have been trading sideways for quite some time, which is almost not quite 24 hours, but coming up to it, and we've gone, even if we've come slightly up, if we come back down and create this head and shoulders and we come down, the one thing to watch is that this could be a bar, in which case the price of 32,100, 32,000 could come into play, which means we could dip back into the pattern and even go down to the bottom. So I would say that's a less likely scenario, but it is possible. And a Bart Simpson, for those of you who don't know, is basically a pattern that looks like Bart Simpson from The Simpsons head. Right? Sharp incline across, slightly up or down, it doesn't matter, but the zigzag is the most important thing and then comes down. So that is another thing to watch in terms of if you're shorting, we could go a bit lower and there could be a bit more to come in. So in this instance, normally I would put in a cheeky buy order at the CME gap, and I'm not doing that now because we could come lower, right? Or not go down there at all.
The safer thing to do is to watch it live. We know when the CME opens, whatever time zone you're in, it opens in 3 hours and 40 minutes. Mark that on your calendar. It's better to just be paying attention.
Yeah, exactly.
Like, in other words, one of my expressions is don't try and, like people say, don't chase a moving train. I also say you don't get on a moving train by standing in front of it on the tracks. Right? That's not the way to get on a moving train, right? Yeah. You wait till the train stops and then you get on it. Yeah. And so if you're not shorting that correction, if you see it happening, in fact, you know, if it's going hard, that might be a good opportunity to short. I'd like to see the volume to know whether I'm going to do that, right? But putting a buy order in at the CME gap in this scenario, when the CME gap's above the point of confirmation of that big pattern, and we might be looking at a Bart Simpson. It's not a really beautiful Bart Simpson, so I think that's a lower probability. But I would rather put the order in when I see the market stop at the CME gap.
And like bounce back off of it.
Yeah, exactly.
Yeah, cool. Let's look at Ethereum. So that is my pickup sticks chart. So let me go to this chart here. And I am going to delete everything as we like to do, take everything off. Start with a clean head so we can see things that perhaps we didn't see before. And we go to the monthly to get your Fibonacci's in. Wow, look at that. Get your Fibonacci retracement tool in, going from the swing high to where the market started going up into its bull cycle. Well, started just going up basically, right? And you can see we're still trading under the golden ratio. So now I'll come in and I'll go, where's the weekly? Where are we on a weekly basis? And it looks like we've found support at 1600. Will we go lower than 1600? Some people have got 700 on the table. I think it's highly unlikely. Oh, one last thing on this chart I forgot to mention. If we're following this fractal pretty much very, very closely, the one thing you don't see in the Saturn retrograde in 2020 is a big dip past past the support that has happened around about when we first dipped. There was no significant dip past that first dip, right? That has not happened. So if we're following this fractal, We could say the bottom is already in. So that's that's potentially something to be thinking about. So you don't get into getting married about whether or not we are in a bear market and we're going to lower prices. So I'm actually going to draw some descending triangle here, which is a bearish pattern. Right, in which case those lower numbers could come into play, but look at how much support we've got on the weekly. Lots and lots of support here, right? We've just not wanted to come below 1600. So now let's bring in the EMA ribbon. EMA. And we're being supported. Unlike Bitcoin, we haven't actually dipped down on the weekly EMA. We're still being supported in it. So I would say that that is a slightly more bullish scenario for Ethereum than it is for Bitcoin. And Ethereum might actually end up leading this market because it started breaking out of its patterns sooner than Bitcoin did. So now let's go to the daily. Let's see what we can see here. Move that up a little bit. 1661 is a little bit higher than that, right? We don't seem to want to go lower than that. So now let's come down into the 4 hourly. A little bit overbought here. Come back down here a little bit here. Look at this. We got rejected off of the Fibonacci level at 2164. So close up here. Didn't quite make it to the top. This is where I now like to bring in the 4 EMA to see, are we bullish? And we did. We flipped bullish on here, on this candle here at around 20,030, right? So if you held a lot, got into the long here and held it open, this long is still good. We haven't got any signs of these lines crossing over for bullish action, for bearish actions. But let's go down. Obviously, if Bitcoin goes down, it's going to take Ethereum with it more than likely. We're still bullish here. Oh, no, we're not. We're bearish on the 4 hourly, right? That's the baseline, the green base. No, sorry, because I changed my colors, so I'm a bit confused. Just forget what I just said.
I know I can't look at your Ichimoku cloud because it's different colors than mine. I'm like, what?
Yeah. So okay. So here's what I'm seeing here immediately. A column here, right? A channel. This breaks to the downside. So we're going back down into the bottom of the pattern here by the looks of it, right?
And don't forget, on Ethereum, we've got a CME gap, right?
Yeah.
Ethereum closed.
Your chart? What's the CME gap?
Well, Ethereum closed at 2040, right? You can see that. Yeah, let me share my chart. I always pay attention to oh, I need you to give me host controls. I'm going to share my screen.
Sorry.
Yeah. But I always pay attention to that because it's really good odds that we're moving in the direction of where the CME gap is, right? So you want to make sure you put these charts in your favorites on TradingView, right? It's Ethereum futures, and make sure it's got the CME reading in the ticker. It's called ETH1 exclamation mark and has this little D here. Same with the Bitcoin one, BTC1 exclamation mark, right? And they have this little tiny dotted line here that gives you the price at which the CME closed, which is 2040. Same with Bitcoin, right? That's why I needed to flip over here to see it. 32,400, right? And if you want to get really precise, you can go down onto the 1 minute and see, on the 1 minute, the CME closed at 32, right here, 32,475. Right. So, you can get more precise in it if you want, although it tends to, when it closes, it usually doesn't come down to the dollar. Yeah. Although I have seen it go straight down to the dollar, right? We could actually look at ETH on the 1 minute too.
Yeah.
which is
Somebody,
30,
I'm
20,
just going to
42.
interrupt you, Teresa.
Yeah.
Naseem said, "What's the signal, buy or sell?" I'm not quite sure if you came in and watched the bottom, but like there are like 24/7. There are not signals 24/7 to trade. Sometimes you have
Yeah.
to wait days. Sometimes you have to wait hours. So there isn't always a signal to buy or sell. We're showing you the setup for where the signals are going to be. You need to watch those signals, and when they happen, that's when you put in the long and the short. So I encourage you to go back to the beginning and watch the technical analysis so that you learn proper technical analysis to be able to read it yourself. Because right now there isn't in Ethereum or in Bitcoin, there isn't a signal to buy or sell. We're waiting for the signal to happen.
Yeah. I think that it makes sense to talk about what makes a successful trader, right? Nassim, let me just talk to you straight for a minute, okay? Because in any given moment, it's sort of like if you want to be a star athlete, right? And a star athlete on the field in any given moment doesn't have a play to make. But a star athlete knows what to watch for in the game and is ready for whatever play plays out to jump into the play and score the points, right? That's the way trading works, as if you want to call it a sport, right? So you just got to understand what we're trying to teach you is how do you read the play? How do you understand how to become one of those star athletes so that when there are the correct indicators to make a trade, and what a successful trader does is you develop a trading strategy. Like I know just from watching them that like Carl Moon, Chris MMCrypto, my trading strategy is different than them because I came out of the world of Forex, and I've developed my own strategy, right? Just like some traders make it sound really sexy to use high leverage, like you'll make way more money if you use high leverage. That's one of the biggest myths in trading. If you think you'll make more money with high leverage, you don't understand how leverage works. Professional traders use low leverage. And if you don't believe me, go watch the video that I did on determining how much leverage you should use. And I actually worked through the math for you to show you it's way better to do 100% of your trading portfolio in a 2x leverage trade with a tight stop loss. So you personally, I never risk more than 2%, 2.5% of my portfolio at any one time. So I would use a tight stop loss on a 2x trade. That's still a big stop loss. That is better than only putting a little bit of your account in at a super high leverage. And the way the exchanges report leverage make you think you're making more money. You really aren't. It's the same amount of money you make. A $10,000 trade is a $10,000 trade. You'll make the same amount of money, whether it's a 10x trade with $1,000 margin or whether it's a 2x trade with $5,000 margin. You make the same amount of money. So what we're trying to teach you here, sorry, this is my little soapbox rant. What we're trying to help you see is there is a skill set you need to be a successful trader.
Yeah.
And the first part of it is learning how to do technical analysis, which I'm the first to admit. I'm solid at technical analysis. Nicola, even more so. I learned from her. This is one of the skills. Nicola's one of the best in TA I've ever met. That's why I come on these calls with her. And that's why, truthfully, you'll see when we do these calls that I let her take the lead on technical analysis, because as solid as I am on it, I think she's brilliant at technical analysis, like certainly one of the best traders I've ever met. And but it's more than technical analysis you need. You need a consistent strategy. You need to trade it consistently. You need a different strategy, whether you're in a bull run or a bear run or a sideways market. Those are different strategies. You need a plan for what you're going to do when there's market dumping or a blow off top. I have plans for those. I have a checklist for how I trade those. In fact, I did a video on one of those recently, right? And you need to think about that beforehand, because just like a superstar athlete, if they haven't thought about how they're going to execute the play when the play comes at them, they're going to just deer in the headlights and do the wrong thing and no scoring happens.
Yeah.
Right.
So Teresa, we've gone And we haven't
yeah.
gotten to XRP yet. So let me just show you a few things that
That
we
was a
can help
really
you with.
fun rant, though. Thank you for letting me rant.
No, but it is a bit of a rant, yeah. For those of you who don't know much about our channel, we are a tutorial channel. We're teaching you technical analysis. So make sure you subscribe, hit the bell and click all so you get our daily tutorials as well as our live streams. We are going daily for live streams at the moment until we do the big breakout into the bull run. Going through the bull run, we'll see. But normally we do a live stream every Wednesday at 5:30 p.m. UTC time or 10:30 a.m. Pacific. Also, folks, we've got right before the super cycle happens, as we're predicting, just after we come out of Saturn retrograde and we start, potentially going up and up and up and up. This is when people are going to be made millionaires, multimillionaires, billionaires. And if you want to be one of them, you need to get an early bird ticket special to the Conscious Crypto event for traders. The link is in the description below. And it's 3 days of teaching you really good, solid strategies, mindset, psychology, which coins to get for the super cycle. Let me show you who we've got speaking. Our friends, MMCrypto, Chris, and Da Vinci Jeremy from Da Vinci J15, giving you some really solid strategies. Things they can't tell you on YouTube because of the censorship, right? They're going to be able to tell you in this workshop on Zoom. We've got offshoring so that you can maximize your profits, minimize your tax. I'm going to be talking about breaking bad trading habits and patterns of losing money. We've got another 2 speakers here, which we've confirmed, but we just haven't got them up there. We'll tell you about that tomorrow. We're going to have breakout technical analysis workshops with Jeroen van Lange, who, in my opinion, is way better than me and an amazing technical analysis. Jeroen van Lange is one of my faves, and Marzel Money as well. If you have a VIP ticket, you're going to get an opportunity to have your portfolio looked at and get some one-on-one. You're all going to get the opportunity to ask these YouTube. Then we've got panels. What indicators do you need to use? How to use them? We've got Didi Taihutu from the Bitcoin family joining us for that. And then we've got Rob from Digital Asset News, as well as Da Vinci J and MMCrypto on how do you put your end of the bull run strategy together. You're going to walk away from these 3 days with everything you need to know to become a millionaire or a multi-millionaire as we go into that super cycle. The tickets are cheap right now. You can save $400. You're going to have to get your ticket today or this week. Otherwise, you're going to be paying more later on. Right. And very soon we're going to be releasing interviews from the speakers that are showing up. So you're getting a little bit more information before we even get to the event. We've got a couple of tax experts we haven't put up here to help you minimize tax. We've got portfolios on all of the, no, hang on a second, what are we up to? Mindset, psychology, expert panel on what are you going to do with all of that Bitcoin so that you aren't going to give it all to the tax man, and also balancing your portfolio with altcoins, DeFi, NFTs. We've got some sheets that are coming to you that have some really good solid coins that you might want to be in for the super cycle. You are going to get so much value out of this and grow so much from this that you absolutely want to get your ticket today. So that's my rant for the day. Let's get back to Ethereum, because what I'm looking at immediately on the 4 hour is a potential Bart Simpson. So when we've got a potential Bart Simpson forming on Ethereum as well as Bitcoin, and see that it plays out. Not only that, this is going to go, we've got an ascending wedge on the 4 hour, which on the bigger time frames, this is looking like this is a short here, right? So I'll tell you the entry point in just a minute. These ascending wedges, channels, go back down to where the candle stops, first touches. So we're looking at a potential, we could go back down to 1750. Having said that, we've got good support on the Ichimoku cloud at 1900. We've also got the CME gap at 2040. So we could bounce off of here and not go down to these lower prices. So this is going to be a dangerous short, right? In my opinion, if you're going to short this, what I would be doing is I would be doing a trailing stop loss. And if you go to our YouTube channel and you go to the playlists and you go to Bybit tutorials. Teresa has done a tutorial on trailing stop losses. This would be the time to do a trailing stop loss, because we could bounce back up and wick back up and not actually reach the target of the bottom of the channel, because we've got bullish structure, right? We've got this Ichimoku cloud showing up as support and what have you. But look at this.
I would say if you're not an experienced trader, don't take that short.
Don't take the short.
It's too risky. If you're an experienced trader, you'll know how to do it in terms of mitigating the risk. If you're not an experienced trader, I wouldn't touch that one with a 10-foot pole.
Yeah,
you know, because you're essentially scalping at that point.
Exactly.
Right? And
I'm not.
and if you don't know how to scalp, don't do it. Yeah.
Yeah. I'm not going to take the short. I'm going to set up for the best entry point for a really big long. So look what's happened. This is TA. We've come back. We've broken down. We're coming back right now to test. Is this now flipping as resistance? And we've got rejected off of the Fibonacci level at 2160, right? So now we're watching, are we going to continue to go up here and retest this resistance line up at around 2189, 2190, fall back down, and then come back here? And then that's where you would enter the short if you didn't want to risk it at 2104 and drive it down to 2040, maybe below. That's if if you're prepared to take that risk. But what could happen, because this is what we're seeing in this market, what could happen is this. We could get rejected off of here. We could come back up, go back up again, come back up, come back here and bounce off of that and confirm that as support. Now, when you're looking at signals, we need to wait. We don't place trades based on predictions. We place trades based on the price indications confirming the direction that we are going in. And we are in mega dangerous territory being the weekend. So this is what I'm doing. I'm waiting for 2 o'clock Mountain Time, and I'm going to watch the volume coming in to see where the price is being pushed. Then I'm going to watch at 4 o'clock when the CME opens, and I'm going to look at whether I'm going to place a trade or not as soon as I see the direction confirmed, right? But here, I'm thinking more likely I'm going to wait. If we go below 2032, say, and it looks like everything is going to go further down all the way to the downside, I might consider shorting all the way down to the downside, but I'm not 100% sure that that's what's going to happen. So we're not a signals channel, by the way, too. We're just tutorial channels to help you figure out what to do. And we've just given you how to make that decision. Anything else you want to say on Ethereum? And then we'll go to XRP.
No, that looks really solid.
Hey guys, we've got way more people watching than we've got liking. If you knew how much research we put in before we come live and how much kombucha we're drinking to have the energy to give you and helping you, you would know that it breaks our heart when people don't like what you're doing, because you go, well, is it worth us doing this? Like, if you don't value what we're giving you, Teresa and I have very successful businesses. We don't need to be doing this, right? This is our hobby. We don't need to do this. We don't need it for the money. We don't need it for we don't need it. But what we need from you is an indication that we're giving you value. So like our live streams, subscribe, and give us that signal. Want more from us, and then we can have the energy to give you more. We're not just relying on the caffeine and the kombucha to keep our energy up. We're also getting encouragement from you. So
and I want to say thank you to the few of you who bought us a coffee on the last call.
Oh yeah.
Because all proceeds from this channel, if you use our affiliate links, if you sign up for our events, if you make a donation, all proceeds go to support our infrastructure projects here in our community in Costa Rica. So we build roads and water catchment areas and various things like that. So thank you guys for those of you who've been supporting us. We really do appreciate you.
Yeah, thank you. You'll see the donation, PayPal donation, as well as the as well as the buy me a coffee for those of you who can't quite afford the ticket for the 3-day workshop. That's another way that you can thank us. So the bottom line here, we are waiting to see which direction that we're going in, and we've given you everything. You might even want to rewind this and rewatch that so that you can get all of those entry points that we are talking about. XRP, I love XRP. And then we're just going to do the same thing with XRP really quickly, because this is I think this is our biggest live stream since we did our what do you call it, launch. Turn everything off. We go to the monthly. So by now you're an expert on how to do your market structure Fibonacci's, right? Because I've done it really several times. So I'm going to go to the swing high of this market. This was the cycle top of 2017, which was $3.30. I'm going to do it from here because I want the market structure of this bull run, right? So what I do is I go swing high, and then I will pull it back to where we started going up this cycle, which is this green candle here. And you can see, again, we're trading below the golden ratio. Now, what is really interesting about this, let me just get that out of the way. What's the first thing you see? Can you see that pattern, Teresa?
Yeah. Sorry, I was just looking at the comments. Yeah, that's starting to look a lot like a cup and handle.
Yeehaw!
Yeah.
That is a cup and handles.
Which is one of our more reliable patterns. A cup and handle's very it's a more solid probability. I could look up what Bulkowski says about the probabilities on that one if you like. But yeah, that's solid.
The target for this cup and handles is $4, which is like poking your tongue out at the SEC, which is doing all sorts of really naughty things to suppress the price of XRP, right? So on the monthly, got a little bit more downward action. So let's now bring back in our the neckline. By the way, if we break above $1.77 and we go up to say $1.9875, that is a really good entry point. Let's put that in there for long it up to go to the all-time high and then go into price exploration. So that would be $1. What did I say? $1. Can't remember.
Yeah, so cup and handles are the 13th highest ranked pattern of the ones that Bulkowski ranks in his book, and they only fail 5% of the time.
Wow.
So that's, or fail to at least break even on the trade. So that's his break even failure rate. So that's like a cup and handle is one of our more solid patterns. You can have more confidence in trading a cup and handle.
That's really awesome. So mark this in your calendar, on your charts, guys. $1.9880. That would be a solid entry, breaking the neckline. I mean, obviously, if you're subscribing to us, we're watching this. And we break the neckline of this cup and handle, and we are going up to $3.90, which means we are going beyond the market all-time high, and we are in price exploration. So that's when we would leave the trade open with a trailing stop loss to ride it all the way up to the top.
Okay, Eugene has a question too about the candles on the daily.
Oh, okay.
He's asking, does candle shape play a role as well as the direction? He's looking at the ETH daily candle. If it closes like that, is that considered a double top? That's a really good question.
That's a really good question.
Go flip over and look at the daily? We love it when you ask questions like you guys know what you're doing. So Eugene, that's a solid inquiry to have. That means that you're really getting it as a trader, that you ask questions like that.
Yeah, that's totally could be a double top, which is just another indication that we could come back down to the bottom of the pattern, right?
Yeah.
So just watch it, because it could go up. Just watch that. But way to go! That's awesome. I think it's always awesome that when you when you see something that the traders aren't seeing. Like whenever I see a pattern that Carl hasn't seen or what have you, I feel really good. The other thing is here, which I showed you yesterday, is this is a W, which is a trend reversal. So if we come back down, quite often with Ws, we get to the top of the neckline of the W, we do come down for price action a little bit, and then we get some momentum and come back up. And of course, that's going to pretty much take us up to the golden ratio, but we're a ways off of that breakout yet, so we'll do that as we go. Let's get back to XRP. And we want to bring in our Fibonacci's. Hope you guys are enjoying this. Give us a like if you're enjoying us. Thanks to the guys that just liked. Oh, and Eugene just did a nice little happy face with peace sign. Awesome, guys. We really do appreciate
all
it.
the awesome feedback too. That just makes my day. Thank you.
Yeah, and it gives us the energy to, not drink so much kombucha and be able to do more. Okay, now let's go to the weekly. We go to the weekly. This is my routine. I hope you're writing this down because this is the third time I'm showing you my weekly routine, right? So I'm just going to take this out of the question so it gets out of the way. And then once we've come down into the weekly, we're going to bring in the EMA ribbon to see where we are. Oh, what? I'm already upgraded. Oh, nicely supported. Like, I really don't think that XRP wants to trade below 57.83.5 because look at how firstly we've got a Fibonacci level there. We've got the bottom of the EMA. And if I was going to come in and draw a line just to emphasize it, it's been acting as support here, and then resistance here. So that if we go below, we could go down to 23 cents, right?
Yeah, you could almost draw that as a support resistance box or a zone or channel across there. That's actually a really beautiful support resistance zone.
It is. But look at this. We have a green candle on the weekly, whereas I think on the weekly we've got red candles for the others, signifying this could be a bounce. Like we could be bouncing and going back in the other direction. Yeah. So now let's go to the daily. And we're under the EMA ribbon on the daily. Let me just come see from the big drop, what have we been doing, right? This is where we get our trend lines in. We want as many candles as possible. So that's how I would draw it, so that we've got more candles touching. And even though, strictly speaking, I would not call this a symmetrical triangle because it's going slightly to the upside, right? This is a slightly higher low here. We've got all this white space here and not enough candles. I would look at this, and this is typical of XRP. XRP loves to trade in channels, and we've broken out of the channel. We're coming back down to test 58,184. If we get a green candle at the end of the day when the Chinese market comes on and price action's going up, that is a really good time to long. So let's see what Ichimoku is telling us. No, sorry, hang on. Let me just turn off the EMA ribbon, turn on the 4 EMA first of all. And what have we got? We've got blue, green, yellow, red, and we've had it since here, this candle here. So this is bullish structure, right? We're heading for some upward price action, even though right now we're coming a little bit. So now let's just put lines in on the 4 hourly. This is how my charts get to be like pickup sticks, guys. Right, so this breaks to the upside. We could see further downward action, and obviously what happens with Bitcoin when the CME opens could affect this, but right now this looks like we're swinging to the upside. We'll look at the 1 hour to confirm it, and that means we're going up to 61. We have a lot of resistance between 60 and 63, so for me personally, unless we come all the way back down here, bounce off of this to confirm the breakout, I wouldn't be longing this until we get up to 63 cents, just because we keep getting rejected off of it. Look at this. we've got quite a substantial amount of resistance right there at around 60 90 60 cents and 0.90 or whatever, right? So if we come back down here, let's have a look on the 1 hour. Actually, let's bring in the Ichimoku. Turn off the 4-hour EMA, bring in the Ichimoku. Yeah, we're in a lot of resistance. That's why we're coming down on the 4-hourly. But also, if we've broken out of this pattern, we've gone, you could say this was the breakout here. And then we've come back down to retest it as support, kind of dipped down under it, which is not ideal. But we have come back up. And if you had have done classical TA, you would have entered here. You would have entered in at 61 cents and you'd be losing money right now. And this is what we mean about U-turns. You've got to look at your indicators to get a better idea of where we're going. So now what I would do is I would come into the where is a trade? Where is a trade for for XRP? So we're in the middle of a pattern. The time to have entered along was probably on this green candle at around about 59 cents if you caught it, right? And then you would have come back down and gone back up. But in the middle of a pattern could go down and it could go up. So it's not a good time to short or long right now. We want to wait till we're on the other side of a pattern. So what I would be looking for here, and this could be a Bart Simpson on its angle, right? Up here, coming down here. We could come back down to 57.62 if we do get a dump. And that's not enough profit for me to short. So what I would be doing is getting ready to long. I would either be looking at when we come back, if we call this the breakout, and we come back down to test this line here as support, and then we come back off of that, I would look at the indicators here, clear green candle above this, Ichimoku cloud green, going on an incline to your lower time frames, making sure your 4 EMAs is blue, green, yellow, red, and then I would enter the long here because with XRP, when you get bounces and you get volume, often it just takes off on you. So that would be one entry point, right? Looking at around about maybe 58 cents if we don't go back down into the pattern. The next one, as I said, would be 63 cents. So we're watching. We're going live every day. So we would love for you to subscribe and hit the bell, click all, so that you are on live as we are following these breakouts or fake outs. Is there anything you want to say on XRP?
No, that was awesome analysis.
Okay, cool. Yeah. The other thing is with the XRP is that it takes off on you, so it doesn't often confirm breakouts, which is one of the reasons why when I trade XRP, I trade with lower leverage than I trade the other coins, right? You have some like Ethereum, I think needs a different trading strategy from Bitcoin. And also I think XRP needs a different trading strategy as well. And one of them for me is lower the leverage because it bolts and then it does U-turns equally quickly. And there's also a lot of price manipulation going on with XRP because if you don't know much about XRP, Martin said, love your TA, love it, good show. Great. I'm thankful that you liked it. So with this price manipulation, with the whole SEC thing, we are looking at just having to trade very differently with XRP. But right now, we want to wait till we get to the bottom of this here. If we come back down, and then we get a green candle going back up, and you've got volume, the RSI is towards the bottom, so it's going to go back up again. You could long it to the top, and then see if we break up this resistance, take some profit here, and then come back in at a much stronger position. Or if we break to the downside, which we don't often break to the downside on a downward wedge, we usually just keep trading downwards, see how we're doing lower lows, lower highs, right? And then eventually at some point it breaks out. And let's have a look and see if Ichimoku can give us a prediction as to when that breakout might happen. Could happen when the CME opens, right?
Yeah, very much so.
So an hour after the CME opens, Ichimoku is showing a nice incline up here. Look at this, a nice climb. So this is another indication that we could see a dip and then a bounce up. So just watch for that. When you're putting your trades in, we've given you all of the signals and the price points and what have you. Now what you want to do is watch when the CME opens and see where the volume is pushing the market and get ready to enter the trades in whatever direction that it is getting pushed in, watching out for any potential U-turns. And the way I watch out for U-turns is I come right down into the 1 minute and go, am I going to get surprised here? And right now, looks like we're going to trade sideways a little bit. Then I go to the 5 minute and I go, we got a dip. We're in resistance. So again, looks like we're going to trade sideways. May go up, may go down within this range. Then I go to the 15 minute. Am I going to get surprised here? And it's potentially, if you here, you've got to dip down to the downside short term. So if you entered along, you could potentially end up at a loss. Right, so that's what I do to gauge it. So short term, this looks like we're consolidating, maybe going down a little bit, but longer term, we are in a bullish pattern. So awesome, guys. If nobody else has mentioned any other coins, so I think it's time to just remind everybody to trade consciously, and we'll see you tomorrow. Yeah.
Thanks for joining us, guys. It was really nice to have you here. Awesome questions today. We really appreciate you.
Yeah, thanks for a really good show and for all your compliments. And thanks for all of your likes. And if you haven't liked, it's time to like. And remember, get your ticket for the Conscious Crypto Traders event in October, because this is the setup for you to be one of the millionaires or the multi-millionaires or even billionaires, depending on where your portfolio's at, and because you're in the right trades and you're in the right coins. Bye for now, guys. Trade consciously. See you tomorrow.